Anton, what does the Mercury Group do? And right now, what is the big problem that your clients face?
Thanks for having me on, Joe. We focus on the supply chain and logistics, global logistics for industrial commodities. So steel, metals, ores, agricultural commodities, moving them around the world for trading companies, producers, banks that are involved in commodity trade. So supply chain management focus, right?
Supply chain management focus, and they must be pulling their hair out, their clients, at the moment. There's a great story on the terminal. Out of control shipping costs far up. One toy manufacturer in the UK called The Entertainer, he said, in 40 years of toy retailing, I've never known such challenging conditions from the point of view of pricing. Now he's having to stop stocking a certain kind of teddy bear because it would double in price, Anton. How much are you seeing these prices go through the roof?
Right. Yeah, Caroline, we're seeing astronomical jumps and daily fluctuations on what's happening in the markets. If you look at the focus on the types of commodities that we're moving, which are on the metals and raw material side, industrial commodities, we're seeing, let's say, the ships that are carrying those types of commodities, handy size bulk vessels, have tripled in cost for a daily hire rate. So several months ago, a ship that would carry steel from the Far East to the United States, for example, was running at about $10,000 a day for a hire, or leasing the ship, essentially, in layman's terms. Now we're seeing over $30,000 plus per day for those ships to take a ship on time charter, on long-term lease. So of course that's filtering down to the per ton cost of freight that's going into the aluminum, the copper, right, the steel that is going into the consumer goods that people are buying. So we're seeing it on the shelves, essentially. Right.
So I mentioned in the intro that there are areas of supply chains, commodities, bottlenecks that have shown some signs of maybe easing a little bit. And it's not dramatic, but maybe over the worst of it. It doesn't look like that. Is there any light at the end of the tunnel? Or what's it going to take to start to see that number ease a little bit?
Yeah, it's a good question, Joe. You know, the big question right this week, we saw China intervene on the copper side by releasing copper national stockpiles to try to ease some of the pressure on commodity markets. It's going to, until there is a downward pressure on the commodity pricing in the market overall, we're not going to see much happening at least on the industrial, certainly on the industrial commodity supply chain side, right? Retail focuses on container ships, of course. Energy commodities focus on the tanker markets, but everything is still hot right now. We saw a little downward pressure this week with China jumping in with some of the downward pressure on agricultural commodities. Fed's comments today on interest rates certainly helped, but when is this going to end? Good question. I'd like to know the answer to that.
Man. I thought you were going to tell us.
Yeah, if I knew the answer to that, I'd be buying some interesting futures contracts, derivatives right now.
To that end, how are you trying to hedge this out to a certain extent, Anton? What are you having to put in place to try and alleviate some of the pressures you're experiencing?
Sure, hey, Caroline. The big thing is communication with our clients, making sure that they're not stuck out there, not letting them execute trades and purchases without having the proper freight support at this point. So getting that point across to our clients is key to work in lockstep right now to make sure that if they're going to pull the trigger on a trade, if they're going to buy aluminum, they're going to buy steel, they're going to pull the trigger on a sale of iron or coal, thermal coal or metallurgical, that we have that freight support to back up that trade before they make that particular trade. So communication, hammering home what's going on in these markets to our client base is just critical right now. So getting that communication out and making sure that they all know what's happening. Infrastructure, Joe and I talked about on the podcast last week, is another big part of it. We're seeing strains all over the place, right? So understanding what's happening in the ports, understanding the constraints that we're seeing because of the infrastructure situation, not just in North America, but throughout the globe, key also, right? What ports to avoid, what parts of the inland river system in the United States to avoid, all key.
You know, one thing that we've seen in some areas is this sort of like amplification effect, where if companies are, say, worried about their ability to source semiconductors, then maybe they'll make even larger orders for down the road so that they feel like they can get some. There's like some uncertainty about supply. Is that create an issue with booking freight down the road? It's like, you know what, I don't know what I'm going to need in September or October, but I'm going to try and buy some space now because I just want to get it. I want to make sure I can get on the ship, creating further logistical problems?
I think not as much of an issue, Joe. Not seeing, at least I'm not seeing that. We're not seeing that as a major issue. The focus right now is securing space for immediate needs and short-term needs. We're working on some forward longer term contract business, for example, steel coming out of Southeast Asia running into 2022. So we're trying to secure that in long-term contracts with some flexibility there, but no, we're not necessarily seeing situations where people are making, say, let's use the term ghost bookings, right? That they know or that they think is a good chance that they will not need. It's not really going to accomplish much at least in the world of industrial commodities that we're dealing with. That's not.
And one other thing, it seems like, how much are these sort of seemingly isolated incidents, like the blockage in the Suez, some of the outbreaks that we've seen of COVID in some of the Chinese ports? How much do these sort of little idiosyncratic things at a time when the chain is already so stressed really compound and reverberate for several weeks after?
Yeah, good question. The Suez situation was done in about a week when they cleared the ship. It certainly caused some uproar. You had ships diverting to go around the Cape, around the southern tip of Africa to avoid the canal. Turned out that was probably not the best move for those ships in terms of cost, considering how fast the canal was open. But what we're seeing in China right now with Port of Yantian, just outside of Hong Kong, and several other ports with the COVID situation having massive delays, and now seeing container carriers avoid those ports, that's having some major disruptions. You have a situation, there's already a backlog, as Tracy knows, right? What we dealt with on the teddy bear example, when you already had a situation where containers were getting left behind, now you have ships just avoiding these ports altogether. So just really compounding the situation greatly. There's a few good pieces out in the media about how many ships are sitting off at anchor at some of these ports. You could just see them on marine traffic and so forth. So.